In today's market, not every stock is worth its price tag. Some companies are trading at sky-high valuations with more hype than substance, while others are overlooked gems waiting for their moment. If you're an investor in 2025, you need to know the difference. Let's start with the overvalued names. 1. Tesla. Tesla is still one of the most talked about companies on Wall Street, but its story is changing. Growth has slowed, competition in electric vehicles is fierce, and yet the stock is priced as if it will dominate forever. That kind of mismatch between fundamentals and valuation is what gets investors in trouble. 2. Walmart. One of America's most reliable retailers, has also been bid up. It's a great company, no doubt about it, but its valuation compared to other retail peers suggests investors may be paying too much for stability and safety. Then we have Oracle at number 3. Oracle's cloud business has attracted attention, but compared to bigger players like Microsoft and Amazon, the growth isn't quite matching the price tag investors are giving it. In the financial sector, Visa and American Express are both household names. They dominate payment processing worldwide. But here's the thing. When interest rates are high and consumer spending is pressured, their growth slows, and paying a premium price for slowing growth is a risky bet. Some insurers are in the same boat, where valuations look rich relative to their earnings growth. And then there's Meta. Meta, after years of heavy spending on the metaverse and AI, the company recently downsized its AI division. For analysts, this raises a serious red flag. Are big tech companies overspending in the AI race without clear payoffs? For Meta, that risk is now showing up in the numbers, and investors are questioning if the stock price makes sense. Now, let's flip the script. Undervalued stocks with real potential. Let's take a look at Wells Fargo at number 1. Wells Fargo has nearly 30% upside, according to analysts. After years of scandals and restructuring, the bank has stabilized and is now benefiting from higher interest income. The market may still be punishing its past mistakes, but that leaves an opportunity for patient investors. UnitedHealth Group, at number 2, is another standout, with estimates of more than 50% upside. Despite challenges in the healthcare system, it remains one of the strongest operators in managed care, with consistent revenue growth and expansion into digital health. Long-term, it looks like a growth story that's still undervalued. Now, let's look at Merck and Pfizer, who are two big names in healthcare that are trading below fair value. While demand for COVID treatments has declined, both companies have strong drug pipelines and steady cash flows. For investors who believe in the long-term demand for healthcare innovation, these could be bargain entries. Adobe, at number 4, has been under pressure due to AI tools threatening parts of its Creative Suite business. But here's the twist. Adobe is also integrating AI into its own platforms, potentially turning a threat into a growth driver. Investors who believe in that transition might find today's price attractive. Comcast and CVS Health are two more examples of companies overlooked by Wall Street. Comcast is trading cheaply despite steady broadband and media revenues. CVS Health, with its retail clinics and insurance arm, is positioned to capture the future of integrated healthcare, yet the market isn't fully recognizing that. Now let's look at the energy sector where Civitas Resources and SunCoke Energy stand out. Energy companies often get overlooked when tech stocks dominate headlines, but with oil and natural gas prices staying resilient, these businesses are throwing off strong cash flow at attractive valuations. Industrial and consumer plays like ZIM Integrated Shipping, Herbalife, and Novavax also come into the conversation. Shipping rates, consumer health trends, and biotech pipelines can be volatile, but for investors willing to take calculated risks, these undervalued stocks may offer significant upside. When we zoom out, here's what's really important. According to Morningstar, the energy and communication services sectors are where you'll find the most bargains right now. But across the entire market, overvalued stocks still outnumber undervalued ones nearly 3-1. That means finding true value takes discipline, patience, and a willingness to go against the crowd. So, what's the takeaway? Investors should be cautious with popular names that look overpriced, and open-minded about overlooked companies with strong fundamentals. The difference between overpaying and finding value could be the difference between losing money or building long-term wealth. The question is, are you chasing the hype or buying the bargains? Drop your thoughts in the comments. And if you found this breakdown helpful, make sure you hit the like button, subscribe, and turn on notifications so you don't miss our next deep dive into the hottest opportunities in digital finance.